this morning. If you've got a question or a comment, the WhatsApp number is 0809 440 981. Kingsley, how do FX swaps work and what is the impact of that on our reserves?
Okay, now when we speak to FX swaps, right? It's very straightforward. Kingsley have a need for naira, Zibby have a need for dollars, and we exchange currencies at an agreed. So there's a start date, there's a final, which we call the near leg and the far leg, and there's a pricing to it. So those pricings can come in form of cross-currency interest rate swaps, or it can also be those the pricings, the interest on it may be paid at maturity. So that's basically, but it's common amongst FIs, financial institutions, where they try to intervene for non-FIs like corporates who have needs for these currencies and need to do that swap. So it typically happens. That's literally how it happens. But how it impacts the reserves, that means you're bringing the central bank into the conversation. A couple of times the central bank have gone into FX swap with banks and other financial institutions, basically to boost the reserves and also allow them spend. And this is in anticipation that in a future date, they expect some FX receipts, by way of maybe from sale of crude oil or some other foreign currency revenue that they expect. So they can, the central bank can go into an FX swap with a bank, let's say Stanbic IBTC today, and said, okay, Stanbic, you have enough dollars, give me 10 million, and I'll give you the naira equivalent, or I'll give you securities to hold for 1 year. And a maturity, which is the far leg, we exchange notionals again. So, but it's typically more like helping to bridge some liquidity challenge, depending on the party who requires that currency. So in Western world, we see multinationals go to their banks asking for those currency exchanges so that they can use it for places where they have presence. Let's say BAT, for instance, that is present in a country where they need euro, and they're currently having dollars in America. So they can do those exchanges because they need euro in an European country. And a maturity that is exchanged as well. So it's quite straightforward. For us, whenever the central bank does that FX swap, right, we see a bit of accretion in the reserves, but ultimately we still spendings as well. And a maturity, they make well of those obligations and pay back as well. And they can roll over the swaps as well if need be. It's usually long dated, not less than a year. Most times when we see from the central bank, a year or two, yeah.
All right. Let's talk about the Naira one swap. That didn't seem to benefit anyone. Why?
No, but I think we won't say at this point that we've not seen the Naira yuan swap benefit, right? It's a bilateral currency swap agreement between the central bank and the People Bank of China, right? That agreement we went into the agreement in 2018, sometime around February. And I think in July, the first auction happened. Let's not forget that Nigeria is an exchange control regulated country. So you must show documentary evidence, to assess these flows. The data we got from the central bank website after the maturity of the first agreement, which happened April 2021, shows that they were able to sell 3.6 billion Chinese yuan. Which is not, and a lot of these corporates, these funds were sold, through the retail secondary market intervention sales, to corporates who were looking to bring in raw materials, plant and equipment, and agricultural products. And let's not forget that the retail space, the retail secondary market interventions sales is restricted to some items as well, that basically that importers are meant to bring it to support the economy, support the real sector. So if we had the Chinese yuan happening in the NAFES space, which is the autonomous space where you can buy a willing buyer and a willing seller's market, then it would. All right, can you hear me?
Yes.
All right. It's like glitch here. So we can't say it's not been beneficial. What we can just say to the amount, to what extent have we seen the difference in the market, given that if a lot of the Chinese exporters still rely on dollar still remains king, right? some of these exporters, from China still want to invoice in USD. And because we're not privy to how much of USD Chinese yuan conversion that happens as third currencies as well. So we still see in the NAFEX space a lot of importers, buying dollars and doing a third currency swap, to get Chinese yuan. So let's put it this way: the Naira yuan bilateral currency swap is largely restricted to what happens, in the retail space. So that's basically where the central bank is using it. And so far, I think data shows that the central bank have sold over 7 billion Chinese yuan in over 30 auctions that have happened, from inception to now. So it's a going concern. We are hoping that, begin to see more from that auction as well. We have Chinese corporates here in Nigeria that are into infrastructures, telecommunication equipment like Huawei, and the CCCs and the rest of them here, who also comes to the auction twice a month, to get to bid for these flows as well. So we'll continue to see that. And let's not forget that the central bank continue to, in a demand management strategy to manage how much FX goes out there as well. But I think it's a going concern. The first agreement expired in 2021 and it was renewed. And I just think we can only get better from here.
All right, let's talk about the dual exchange rates. Why do we still have these dual exchange rates? Why can't we have a single exchange rate? The people want to know.
So I'm going to restrict the conversation around the official market, right? And so then maybe let's talk about what happens unofficially. On the official space, I think to a large extent, the central bank has, really tried to unify those rates. Currently, if you look at the retail SMEs results, the lowest is at 460, which gives you a 180 days winnings at that auction, right? And if you look at other interventions that the central bank does as well, let's talk about the SMEs and invisibles. They also sit around 460. They sell at 460. At the retail auction, this is an auction. It's a bid auction that happens. So the higher you bid, it's not that you don't get more allocation, but the shorter the tenor of allocation. So the higher your bid rate, the better the tenor. So there are different tenors from spots, to 15, 30 days, all the way to 180 days. So we've seen a couple of clients who are quite aggressive, who want to bid at 567, 570, so that they can get spot allocation, and that has happened to them. But the central bank also ensures that the clients who have importers who have bid through their bank at 460, get a winning. However, that's a 180 days forward tenor at the auction. So if you look at what has happened, what I have explained around the central bank intervention through retail SMEs, invisibles, SMEs, and also look at where NAFEX is currently trading. NAFEX is currently trading at 464, 465. That's for us Stanbic bid offer, which is not very far. So this is basically speaking to what happens in the official space. However, the unofficial space where a lot of us have concerns, where there's we've seen a lot of liquidity there. It's currently trending around over 700, which is almost 250 to 280 naira premium, right? It's quite difficult. That market is there's a lot of speculation in that market, right? And you find out that the only way we can get it right is when we're able to encourage investors in the official space. So how do we do that? FPI is here. The foreign portfolio investors were basically driving the liquidity we saw between 216 and 219. And a lot of them have exited, the system. And those who haven't left are looking to leave as well because the macros are not quite supportive. So the only way we can get, unify this rate is when there's excess supply of USD. And if you recall, before COVID, the parallel market was trading at 358, and the official market was trading at 360. So it was that was just a 2 naira difference then, and it was even better from the parallel market because there was so much supply. So this whole difference in the official and unofficial space is largely because of supply in the official space. So, and for me, I also believe that for anything to happen, there must be an FX reform in the system, and an FX reform that will drive liquidity in the system. Any FX reform that's been done, by the regulatory body that won't bring in liquidity is just kicking the can down the road. So it's going to be, but I'm very optimistic about the new government and what they have to offer, when they come in, because we are just looking forward to an FX reform that will liberalize the market.
Okay, we have just about a minute to go, but I have two questions left. So the first one, what is your forecast for the exchange rate this year? And second question, what's the antidote to stopping devaluation and even strengthening the Naira?
Okay, from a Standard Bank Stanbic point of view, our official view on the currency at the end of the year is at 520, because in the last 2 years, we've seen gradual depreciation of the currency by the central bank. In 2022, we started at 416 and the currency ended at 460. This year, we started at 460, 461. We're currently at 464, 465. So our outlook as a bank is that the currency we hit should be at 520, except there's an aggressive reform to encourage, investors, both FPIs, FDIs, and otherwise, to bring inflows into the economy. But that would also be at a cost to the central bank and the federal government as a whole. Yeah.
All right. Well, thank you so much, Kingsley Nwaiwu, for being on the show with us this morning.
Thank you very much. And lastly, let me touch the point around, what we need to do to strengthen the Naira. One, we need to drive non-oil exports, right? We need to grow the economy. Inflation is currently at 22.04%. The central bank has, in different MPC meetings, over the last 1 year, increased interest rate, but we've not seen it's not been quite effective, right? But we're hoping that, and this is largely due to the supply chain disruption that happened between Russia and Ukraine. So we're hoping that, everything that has to do with its economy has to go well, from a GDP point of view, we need to see growth, and inflation has to come down and encourage non-oil exports as well, and use the foreign portfolio investors for short-term flows and not for a long-term plan. Yeah, thank you.
All right. Thank you, Kingsley, and have a brilliant day ahead. That is all the time that we have for Business Express. Thanks for listening. Stay with us. There's a lot more to come on the Smooth Breakfast.